If you're 65 or older, 3 things about your money are quietly changing this August, and almost nobody is going to warn you. One affects the exact day your next payment lands in your account. Another is a yearly review that can shrink your Medicare help without a single phone call. And the third involves a brand new tax deduction that a lot of seniors are already misunderstanding. None of these are secrets. They're just sitting in letters people don't open and calendars nobody explains. I went through every detail so you don't have to dig through confusing government paperwork yourself. Stay with me, because the third change is the one almost nobody catches in time. Before we get into the details, let's talk about why August is different from every other month this year. Most months, your Social Security or SSI payment follows a pattern you already know by heart. You check your account. The money is there. Life goes on. But this August, that pattern breaks in 3 separate ways. And if you don't know about them ahead of time, each one can feel like something went wrong, even when nothing actually did. Here's the thing. None of these 3 changes are hidden in some secret government file nobody can access. But they're also not the kind of thing anyone calls you about. No letter arrives that says, "Hey, here's what's different this month." You're expected to already know. And most seniors don't. Not because they're careless, but because nobody ever explained it to them in plain language. That's exactly what we're fixing today. Before we begin, welcome back to Robert Preston Updates, where we break down Social Security, Medicare, retirement benefits, and financial updates into clear, easy-to-understand information designed especially for seniors and retirees. If that's the kind of information you're looking for, make sure you subscribe and turn on notifications so you don't miss our future updates. Now, let's begin with the first change, because this is the one that's going to confuse the most people the moment it happens. If you receive Supplemental Security Income, also called SSI, you're used to your payment landing on the first day of the month. It's been that way for years. You probably don't even think about it anymore. It just happens. But here's a retiree I want you to picture. Her name is Dorothy. She's 71 years old, living in a small apartment outside Tampa, Florida. Dorothy has received SSI for almost a decade. Every single month, like clockwork, her payment shows up on the first. She pays her rent a few days later. She's built her whole budget around that rhythm. Now imagine Dorothy waking up on August 1st, checking her account like she always does, and finding nothing there. No deposit, no message, nothing. Her first thought isn't going to be, "Oh, this must be a scheduling thing." Her first thought is going to be panic. Did something happen to my case? Did I lose my benefits? Did I do something wrong? Here's what actually happened, and it has nothing to do with anything Dorothy did. August 1st, 2026, falls on a Saturday, and when the first of the month lands on a weekend, the Social Security Administration doesn't wait until Monday to pay people. Instead, they move the payment earlier, to the last business day before the weekend. In this case, that means Dorothy's August SSI payment was actually deposited on Friday, July 31st, not August 1st. So if Dorothy is only watching for a payment on August 1st, she's going to think it never came. In reality, it already arrived, just a day earlier than she expected. And here's the part that trips people up even more. Because that payment moved into July, some SSI recipients technically saw 2 deposits land in the same month of July. One was their regular July payment. The other was their early August payment. It can look like extra money showed up out of nowhere, and some people wrongly assume they're getting a bonus. They're not. It's the exact same amount they always get. It just arrived early because of how the calendar fell this year. Now, here's where this gets a little more complicated, and it's something a lot of channels covering this topic get wrong. This schedule shift only applies to SSI. If you receive regular Social Security retirement benefits, not SSI, your payment schedule works differently. Those payments are based on your birth date, and they're already scheduled for a Wednesday each month, either the 2nd, 3rd, or 4th Wednesday depending on when in the month you were born. This August, that means payments go out on August 12th, August 19th, and August 26th. Weekends don't shift those payments the same way because they're never scheduled for the first in the first place. If you started receiving Social Security before May 1997, or you receive both Social Security and SSI together, your Social Security payment still goes out on August 3rd, since that date falls on a Monday this year. So if you're a retirement or SSDI beneficiary, this particular schedule shift doesn't apply to you the same way. But if you receive SSI, or if you receive both SSI and Social Security, this is exactly the kind of thing that can catch you off guard if nobody tells you in advance. The bigger lesson here isn't really about one missing deposit. It's about understanding that your payment schedule isn't fixed in stone every single month. Weekends and federal holidays shift things constantly. And if you don't know your own personal payment pattern, every shift is going to feel like an emergency instead of a normal calendar adjustment. So here's what I want you to actually do with this information. Go check your My Social Security or My SSI account today, not in a few weeks, today. Look at your payment history. See what actually landed on July 31st versus what you were expecting on August 1st. And going forward, don't rely on your memory of what happened last year. Write down your actual payment dates on a calendar, month by month, for the rest of this year. That way, when a payment shifts because of a weekend or a holiday, you already know it's coming, instead of discovering it the hard way like Dorothy almost did. Here's where things get interesting, because the payment date shuffle isn't the only thing quietly happening this August. There's a second change, and this one is even easier to miss, because it doesn't show up as a missing deposit. It shows up as a letter, one that a lot of people either ignore or throw away without realizing what it actually controls. So what exactly is this update? And why do so many people never even find out about it until it's already too late? Let's break it down in simple terms. If you're on Medicare and you take prescription drugs, there's a program called Extra Help, sometimes also called the Low Income Subsidy. This program can dramatically lower what you pay for your Part D prescription drug plan. We're talking about paying just a few dollars for certain medications instead of full price. According to Social Security's own estimates, Extra Help is worth an average of over $5,000 a year to the people who qualify. For a lot of seniors living on a fixed income, this program is the difference between filling a prescription and skipping it. Here's what almost nobody tells you about Extra Help. It's not something you qualify for once and then keep forever automatically, unless your eligibility comes from something more permanent, like being enrolled in Medicaid or a Medicare savings program. If your Extra Help is based on your income and resources on their own, the Social Security Administration reviews your case periodically to make sure you still qualify. These periodic reviews often land around this time of year, late summer, and if you're selected for one, you'll get a letter in the mail asking you to confirm your income and resources. Let me tell you about a retiree named Walter. Walter is 74, lives outside Columbus, Ohio, and has relied on Extra Help for the past 4 years to cover his blood pressure and cholesterol medications. Without it, those 2 prescriptions alone would cost him more than $180 a month. With Extra Help, he pays a small fraction of that. Last year, around late August, a letter arrived at Walter's apartment. It was from the Social Security Administration, asking him to confirm some details about his income and resources for a periodic review of his Extra Help eligibility. Walter looked at the envelope, assumed it was another piece of junk mail about Medicare plans, something he gets constantly, and set it aside without opening it. Weeks passed. He forgot about it entirely. A few months later, Walter went to pick up his prescriptions, and the pharmacist told him the price had changed. Instead of a few dollars, his cholesterol medication was now costing him nearly $50 for the same 30-day supply. Walter assumed it was a pharmacy error. It wasn't. Because he never responded to that review letter, his Extra Help had been reduced starting the following year. Nobody called him. Nobody warned him it was about to happen. The letter had explained it. The letter just went unopened. This is exactly why this update matters so much right now. In August, if you currently receive Extra Help, and your eligibility isn't automatic through something like full Medicaid coverage, there's a real chance you could receive a review letter around this same time. These reviews happen every year, and if you're selected for one, ignoring it doesn't mean nothing happens. It means the Social Security Administration makes the decision without your input, using whatever information they already have on file, which may be outdated. Here's what I want you to do if you receive anything from the Social Security Administration this month, especially anything that mentions extra help, low-income subsidy, or a periodic review of your eligibility. Don't set it aside. Open it the same day it arrives. Read through it carefully. If it asks you to confirm your income or resources, respond by the deadline listed on the letter, not a week later, not when you get around to it. The letter itself will say clearly at the top whether it's an application or a review, so you'll know exactly what's being asked of you. If you're unsure whether something is legitimate or a scam, don't call any number printed on a random flyer or text message. Call the Social Security Administration directly using the number on their official website, or visit your local office in person. And if you're not currently receiving extra help, but you think you might qualify based on your income, don't wait for a letter that may never come. Reach out to Social Security yourself and ask directly whether you qualify. The program doesn't advertise itself. Most people who miss out on extra help aren't ineligible. They simply never asked. Now, before we get to the third change, I want you to notice something these first two updates have in common. Neither one is really about the government taking something away from you. They're both about information that already exists, sitting quietly in a letter or a payment schedule, waiting for you to notice it. The third change is a little different, because this one involves money that could actually work in your favor if you understand how it works. Here's where things get interesting, because this next update involves your taxes. And if there's one thing I've learned from making these videos every week, it's that tax-related changes tend to confuse more retirees than almost anything else we cover. So what exactly is this new deduction? And why are so many seniors misunderstanding what it actually does for them? Let's break it down in simple terms. Starting with the 2025 tax year and continuing through 2028, there's a new temporary deduction available, specifically for taxpayers who are 65 or older. It's sometimes called the senior bonus deduction. Depending on your income, this deduction can be worth up to $6,000 for an individual, or up to $12,000 for a married couple who both qualify and file jointly. This is separate from the regular standard deduction you already receive, and it's separate from the extra standard deduction that's already available to seniors. In simple terms, it's an additional amount that can reduce how much of your income is considered taxable, and it applies whether you take the standard deduction or you itemize. There are income limits attached to it, though. The full deduction is available if your income is under $75,000 for a single filer, or under $150,000 for a married couple filing jointly. Above those amounts, the deduction gradually shrinks, and it disappears completely for single filers earning around $175,000 or more, and married couples earning around $250,000 or more. Now here's where the confusion starts. And this is exactly what happened to a retiree named Carol from a small town in North Carolina. Carol heard about this new senior deduction from a neighbor sometime last year. The way it was described to her made it sound like a straight-up bonus, like the government was simply going to hand her an extra $6,000. Based on that assumption, Carol didn't bother adjusting anything about how much tax was being withheld from her Social Security and her small pension throughout the year. Why would she? She figured this new deduction would more than cover whatever she owed. When Carol sat down with a tax preparer earlier this year, the numbers didn't match what she expected. The senior deduction did lower her taxable income. That part was true, but it didn't eliminate the existing rules around how much of her Social Security benefit becomes taxable when combined with her other income. Carol still owed federal tax, and because she hadn't adjusted her withholding at all, she ended up owing more than she had cash set aside to cover, right at filing season, when money is already tight for a lot of retirees. Here's the part most people never hear about this deduction. It reduces your taxable income. It does not change the underlying formula that determines whether your Social Security benefits are taxable in the first place. Those are two completely separate things, and mixing them up is exactly what led to Carol's surprise. If you have pension income, IRA withdrawals, part-time work, interest, or investment income on top of Social Security, this new deduction might help, but it's not going to erase your tax bill entirely, and assuming it will, can leave you underprepared. This matters especially right now in August, because if you make quarterly estimated tax payments, meaning you're not having enough tax automatically withheld throughout the year, your next payment deadline is coming up in mid-September. That gives you a window right now, this month, to sit down, look at your actual income for the year so far, and figure out whether you're on track, or whether you need to adjust something before that deadline arrives. Waiting until September to think about this for the first time doesn't leave you much room to fix a problem if one exists. Here's what I'd recommend you actually do this week. Pull out your most recent Social Security benefit statement, called your SSA 199, along with any pension or IRA withdrawal records you have so far this year. Add up your total income, then either speak with a tax professional or use the IRS's own withholding tools to check whether you're likely to owe money when you file, or whether you're already on solid footing. If you discover you're behind, you still have time before that September deadline to make an estimated payment or adjust your withholding through Social Security using a simple form. The key is finding this out now in August, while you still have time to act, instead of discovering it in April when the options for fixing it have mostly disappeared. Now let's talk about a mistake I see connected to all three of these updates, because it ties everything together. The mistake is assuming that if nothing feels different, then nothing has actually changed. Dorothy assumed her payment was missing because nothing in her life had changed. Walter assumed the letter was junk mail because his routine hadn't changed. Carol assumed the new deduction would cover everything because the rules around Social Security taxation hadn't changed for her personally. In every one of these situations, the person's life stayed the same. It was the system around them that quietly shifted. And that's the exact pattern that catches retirees off guard again and again, not because they're not paying attention to their own lives, but because they assume the rules are just as steady as their routine. So let's bring all three of these together, because each one connects to the same underlying lesson. This August, your SSI payment schedule may look different than you expect, simply because of how the calendar falls this year, not because anything went wrong. If you receive extra help for your prescriptions, this is the time of year the Social Security Administration typically reviews eligibility for people whose extra help isn't automatic, and ignoring that letter can quietly cost you real money on your medications starting next year. And if you're 65 or older, there's a new temporary tax deduction available to you, but it works alongside the existing rules for how your Social Security is taxed, not instead of them, which means this is the month to check your numbers before a tighter deadline arrives in September. None of these three things require you to panic. They don't require an attorney or a financial advisor sitting across the table from you. What they require is exactly what we just walked through together. Check your actual payment dates instead of assuming. Open every letter from the Social Security Administration the same day it arrives, and take 20 minutes this week to look honestly at your income and your taxes before a deadline sneaks up on you. Let's turn this into one simple checklist you can follow this week. Step 1. Log into your My Social Security account today and confirm what actually landed in your account on July 31st and what's scheduled for the rest of August. Write your real payment dates on a calendar so you're not caught off guard again. Step 2. Check your mail carefully for anything from the Social Security Administration, mentioning extra help or a periodic review. If you receive one, open it the same day and respond before the deadline printed on the letter. If you're not sure whether a letter or call is legitimate, hang up or set it aside and call Social Security directly using the number on their official website. Step 3. Pull your SSA 1099 and your pension or IRA records. Add up your income so far this year. And either speak with a tax professional or use the IRS withholding tools to see whether you're on track before the September estimated tax deadline. If today's video helped make sense of something that felt confusing, do me a quick favor. Share this with someone you know who's 65 or older, a parent, a neighbor, a friend from church, anyone who depends on Social Security or Medicare the way you do. A lot of these updates never make the evening news, and honestly, most seniors only hear about them from each other. One share from you could be the reason someone else doesn't get caught off guard this month. And if you found this useful, make sure you're subscribed to Robert Preston Updates and turn on that notification bell. Every week, we break down exactly what's changing with Social Security, Medicare, the IRS, and your retirement money in plain language without the confusing government paperwork. I'd love to hear from you too. Have you ever had a payment show up on a different day than you expected? Or opened a letter from Social Security that changed something you didn't see coming? Share your experience in the comments below. Your story could help another viewer catch something before it costs them money. I'll see you in the next one. Take care of yourself and take care of your money.